Welcome back, everyone. We have an exciting episode to get into. Amazon recently had their Prime Day. We're going to be looking into how that went. Is the consumer slowing down? Are we in a big recession, or is Amazon doing business as usual? We also are going to be looking at an Amazon competitor named Temu. You've probably heard of the company. They advertised in the Super Bowl, and this is what it looks like. They seemingly sell a lot of junk, a lot of trinkets and cheap electronics, but they're hitting this market really hard. And a lot of analysts, including this one here, he's making the bold claims that Temu is a force to be reckoned with. They're making a lot of ground, they're interactive, and they're coming after retailers like Amazon. Amazon should be worried. That's what he's saying. So we're going to be looking at his arguments as well. Now, we also have an update on the strikes against the studios. We know that the writer strike has ended, so they are able to resolve that. My prediction, and I have to say, I got this wrong here. I thought since the writer strike was solved fairly quickly, that it would put more pressure on the actors to resolve their strike even quicker. I thought it would be a quicker resolution. It's not looking that way. The Actors Guild and the studios are now further away than when they started. They are really upset at each other at this point, and they've even stopped negotiating. They're not even meeting together. So this looks like it's a bad situation. We're going to dive into the details. And then finally, we're getting to the weekend, where this time we look at TikTok for financial advice. And the financial advice we're getting this time is a live lesson of why not to day trade, not to do these type of technical trades. We'll be looking at this short clip here. So obviously we have a lot to get to. Let's go ahead and jump right in. We'll start off with a portfolio update of the Story Fund. The Story Fund is my secondary portfolio where I have a bit more of an aggressive investing strategy. As you know, I only have 6 positions, and a large amount of capital is concentrated into this top company, Amazon. I have 35% of my portfolio in Amazon, almost 36%. Now, I invested in Amazon and it took a big dive. It sold off down to around $90 to $80 per share. Now it's coming back up. If we look at Amazon today, it's up to $131, and it's just trading back and forth. So Amazon's a bit of a volatile company now. But underneath Amazon, I continue to invest in this company for a couple different reasons. One of them is the online retail space. I think that it's amazing. Amazon has a great retail business. They have the Prime subscription business. That's high margin. That's like Costco's membership model. Then they also have an advertising business that they layer upon it. Advertising is a very good business to be in. And then they have, of course, AWS. So those businesses, the Prime, the ads, and the AWS, I believe are core intrinsic value drivers of Amazon. And I want to see these businesses grow. Now, as we've heard over the past couple of months, everyone's predicting a recession. And a recession means that consumers slow down spending to the point where GDP goes down. The biggest portion of GDP, around 70%, is consumers. So consumers decide whether or not we're in a recession. If consumers continue to spend, we're not in a recession. And right now, what we're seeing with Amazon is that at least with online retail, consumers are not slowing down. Now, that doesn't mean that they're not slowing down in other parts of the economy. I believe they are. I think they're slowing down on buying cars and homes and other things, big expensive things that require financing. But Amazon purchases typically don't require financing. People finance it short term with their credit card. So here we have an update on the consumer in regards to small, inexpensive items. And what we can see right from Amazon's report so far is that the first day of Prime Day this month was a resounding success. In fact, it's on track to be the biggest Prime Day event ever. They say the company's largest 2-day October holiday kickoff event ever. So we know that it's the biggest Prime Day ever. Now, they say on the first day of Prime Day, Prime members purchased more than 25 million items with same day or next day delivery, with hundreds of thousands of items delivered within 4 hours of purchase. The fastest delivery in the US on the first day of the event was 54 minutes in Ohio. It was ordered at 7:20 a.m. The customer ordered pasta attachment for a KitchenAid stand mixer and the all-new Ball book of canning and preserving. So it was a book on preserving and canning food and a KitchenAid attachment. They got that order received in 54 minutes. It's pretty incredible that this person ordered something and received it within 1 hour. That's shorter than the amount of time to go to the grocery store and back. Now, they're highlighting right off the bat, and I think this is interesting. They don't highlight how many items were sold in total. They're highlighting items that are being delivered today or tomorrow, next day delivery. They say over 25 million items on the same day or next day delivery. I believe they're doing this because that's the single biggest competitive advantage that Amazon has, their next day delivery. There's a lot of other places to buy things online, but getting it within a day is very unique. That only happens with Amazon's logistics. They say the early shopping holiday trends are for apparel, beauty, home, toys were amongst the best-selling categories. Customers purchased millions of Alexa-enabled devices, including the Fire TV and Echo, which were bestsellers. We have the Apple AirPod Pro 2nd Gen, so people are buying Apple products. We have another portable carpet cleaner. That's always been a big one. This Bizzle carpet cleaner shows up seemingly every Prime Day. Whatever they're doing, whatever Bizzle's doing here to get into this Prime Day sales, other companies need to look at what they're doing. We have Squishmallows making the list here. Those are very popular. Barbie toy boat playset. Obviously, this was helped by the Barbie movie, so that made it on the list this year. Prime members ordered more than 150 million items from independent sellers in the Amazon store, most of which are small to medium-sized businesses. So there's still an overwhelming amount of items being sold by third-party sellers. So what we know as of now is that Amazon is doing well. Prime Day seems like a big success, their biggest one ever, and it's trending in the right direction. But that's not the full story. See, off into the distance, somewhere way far away, there's this looming threat, and it's creeping closer every hour. It's been one of the most top downloaded apps in the Apple App Store for over a year. It's called Temu, and this company is a Chinese retailer that has big money backing it, that has insane deals on its website. Now, to look into this threat, I want to go to this interview here, because I think that this expert on the subject highlights the case for Temu.
So talk a little bit about the Temu effect. And Temu is this Chinese retailer owned by Pinduoduo, and there's been worries, rising anxiety that it's going to displace everyone from Amazon to the dollar stores to PayPal.
And Costco as well. So, I mean, this is
It's going after Costco as well. He throws in Costco as well. So Temu is going after PayPal. It's going after Amazon, Target, Walmart, all of them.
An application that uses gamification, user-generated content, highly engaging, and it is taking over the App Store. It's a threat to everyone, including Amazon, as it makes a very fun and engaging experience at a low price point.
Right.
A lot of the tactics that Temu uses are right out of casinos. They're literally like casino games where you're gambling. The first thing that happens when you visit Temu is it has a spinning board where you can spin it and then try to see if you win something. So right off the bat, you're introduced in a game. It literally feels like you're playing a video game of some sort, and you have that gamification he's talking about. But again, that's not the only tactic they're using. They're using every type of addictive tactic they can.
Right. On an absolute basis, though, Amazon is still extremely dominant here. But it's only been a year that Temu has been here. We've seen the Super Bowl commercials. It's been at the top of the App Store downloads. How worried should American retailers be of the threat or non-threat that it poses? What have you seen in China?
They should be very afraid. I mean, this is on par with what Shein did with fast fashion and how we're seeing that affecting the likes of Zara and Uniqlo and others. This is a company, though, that goes beyond just fast fashion and also, again, targets very small goods, electronics and trinkets, and therefore that whole range of potential customers and retailers are at risk.
Right. And
He just said we should be very afraid if you're any U.S. retailer. Now, again, we just had the data that Amazon's doing well, but then we also have the data that Temu's growing rapidly. It's the most downloaded app. So we're trying to juggle different data here, but let's continue on with this conversation. So far, it's a bit alarming.
Such a short amount of time, they've managed to actually gain a lot of American consumers. I think Morgan Stanley estimated that about 15% of U.S. consumers have used the app. Why aren't regulators more focused on this? It feels like they're very, very focused on TikTok, But in reality, Temu and Shein and these Chinese e-commerce apps have been gaining so much ground.
Well, I think one, they maybe don't know a lot of them are Chinese. Two, they've come very quickly, as you said, 0 to 3 billion GMV in just under a year. And they're it's hard for Congress to get ahead of new technologies and particularly ones that are coming out of a market like China.
Right. Well, they'll hear more and more about it. Ben Harburg, thanks so much for being with us today.
There we have it. Temu, Shein, and TikTok. Temu's now downloaded more than Shein or TikTok. That's how big this app is. It is massive now. So Temu sells a lot of cheap junk. Now there's a market for cheap junk, but another thing there's a huge market for is ripping off US corporations. Here is Temu's Adidas. This looks a lot like the Adidas Ultra Boosts, the Ultra Boost Lights. If you have those shoes, you'll notice that this is almost the identical design for about half as much. Then they also have Adidas knockoffs across the board. This looks like literally a replica of Adidas shoes. These are not Adidas shoes. These are cheap knockoffs. In many cases, they're half as expensive or a quarter as expensive. Here's what real Hey Dudes look like, sold on Amazon for $51. Here's Temu's Hey Dudes, sold for $13.47. Now you might notice that these aren't really Hey Dudes. These are men's lightweight, breathable, non-slip, comfy, casual shoes for jogging, spring, and summer. Of course, they look a little bit like Hey Dudes because they are an exact replica of them. The examples of this continue. Here's what Crocs look like. Now this is real Crocs being sold on Amazon for $25 to $35. That's the actual price of Crocs, around 25 bucks. But don't worry, if you search Crocs on Temu, you won't find name brand Crocs. You'll find the exact replicas down to the last detail. They even have a picture of a crocodile exactly on the buckle there. So they've literally copied the exact design down to the last details, but they're not Crocs. They're not paying Crocs any money. These are solid cover EVA round toe soft comfortable clogs. Wear resistance non-slip outdoor sporty sandal slides. This is Temu, once again, brazenly copying and ripping off US companies, stealing their IP, and then selling it for cheaper with their cheap manufacturing. And it's more than just shoes. They knock off every single item you could dream of from American companies. So we have a company that's funded by the Chinese, growing across the US at rapid scale, faster than TikTok, faster than Shein, one of the top downloaded apps that has zero respect for US intellectual property, that routinely and brazenly rips off US companies, that Congress and the FTC doesn't seem to care about. In fact, the FTC is actively suing Amazon over little nuances with how they deal with sellers, meanwhile completely ignoring one of the biggest threats to American retailer. That's the situation we're in right now. There should be more focus and attention on Temu and how they're running their business, because a lot of the things they're doing, even copying US companies to skirting tax policy, should be under scrutiny. So that's the update on Temu. I'll be looking into this company more in the future, but so far I am concerned about what I see. Now moving on, we get to the news of the studios versus the actors. We have a strike and a standoff. They're trying to make an agreement. I thought this agreement would happen sooner than later, but it looks like I was wrong in that prediction. The last update from this is really bleak. It doesn't look good at all. Now let's go ahead and look into the details of this. There is some narration of this from the media, but we'll try to break it down. They say the studios announced that they had suspended contract negotiations, saying the gap between the two sides was too great to make continuing worth it, despite an offer as good as one that recently ended the writer's strike. That's a bit of opinion. We don't know if this offer was really as good as one that ended the writer's strike, and we don't know if actors hold as much sway and have as much bargaining chips as the writers. I think when you're putting together a show, I believe actors are more replaceable than writers. Writers they're important, they're critical. You literally can't do the show without them. And although there's some shows where actors are important, especially if you've already started with a certain actor, but most actors can be written out of a show. If an actor has a health problem, they write them out of the show. So I see writers as even more critical than actors. But regardless, this is all just opinion. The Actors Union decried their opponents' quote, bullying tactics and said they were wildly mischaracterizing their offers. The SAG-AFTRA proposal, which this is a long way of saying the actors, this is the actor side of it, their proposal would cost companies an additional $800 million a year and create an untenable economic burden, the statement said. So that's what it came down to. They're asking just shy of $1 billion per year raise for the actors. The studios are saying, no way, we're way too far apart. Now, the actors are responding, saying that this is overestimated. The union said its negotiators were profoundly disappointed the studios had broken off talks. So as of right now, they're not talking again, and the strike could continue on for any amount of time. There seems to be no resolution in immediate sight. Now, I think the actors are in a difficult situation. They're not just asking for a pay raise of very fortunate, wealthy companies. They're asking for a pay raise of companies that are going through a major transition, companies that are competing with YouTube. We just recently had a report that YouTube, in terms of total viewership, passed up Netflix. YouTube does not have to pay actors. They don't have to deal with writers. So these actors are asking for an additional $800 million per year during a time where legacy media is competing with newer content creation media. And I think that's a very unfortunate timing on their behalf. I don't believe they have the same bargaining chips that they once had. So we'll see what happens, but I see no reason for the studios to make major concessions. Now let's move on to the TikTok of the week. In this case, it was these traders. I wouldn't call them investors, I'll call them traders. And they're filming themselves, and they have at the same time a film of the trading of the current trade they're doing. Now, as far as I could tell, I could not see what they were trading or what type of bet they were placing. We can just see the profit loss being highlighted here. So in the circle, we have the profit loss blown up for us. I'll mention that one of the ways I started my YouTube channel 5 years ago was by uploading a video where I said, this is how investors lose money. And it was by day trading. It's a video that got nearly 500,000 views. It's one of the most popular viewed ones. And I literally just showed a montage of people losing money trading. And for some reason, it never gets old. So let's go ahead and just take a look at these traders.
5 seconds. Let's see. It's got a nice little, little movie.
Oh, shit.
Ooh.
It went from 80, almost 90,000 to 15,000 literally in 1 second. 1 second. I don't think it was even 2 seconds. I think it was just one. Look at this.
Let's see.
Little movie.
Hold up.
This area right here.
They're hoping it will go back up now. Just holding on.
Ooh.
Huh. It's interesting.
Hold up, wait.
Need a wick out and go. Simple.
Look out. Come on.
So we're at from almost 90,000 to now negative 30,000. And literally this has been, this is 30 seconds long is what we're in right now. 30 seconds to lose $90,000.
Wow. What the f?
What's the exits?
Exit is like now.
Like now.
Yeah. 150. Equity.
There you have it. Minus 70,000 is where this closes off. So they went from positive 85, 90,000. Let's take a look at the beginning here. From positive 84,500 to minus 69,000. So around $160,000 lost in less than 40 seconds. That is trading. What would possess anyone to do this? I don't know, but I've been warning against it for years. Don't do day trading. It's a quick way to lose a lot of money. That's all for now. I'll see you in the next one.